Okay. Yep. Okay, guys, good morning to all of you once again. Today is the 12th of July. All right, Monday. All right. So how many of you watched the Euro 2020? All right. How many of you watched the Europe 2020? If yes, key the word me, M-E. All right. If you have watched the Euro 2020, please text me, M-E. All right. All right. Morning to you. Hi, Ong. Wei Xiong, right? All right. Welcome to the big family. All right. I think I recognize some of you guys. Okay. All right. So yesterday I watched it, right? I watched the second half because that is the usual time I wake up at 4 a.m. All right. Then after that, I remember my boy wanted to watch because his friends are all watching. So I brought him in. Then obviously my daughter was there. We watched it together. It was pretty fun. Of course, after that, my daughter couldn't take it. She went back to sleep. My son and I, we watched it through the game. So the cup didn't return home. It's going to Rome. All right. Okay. Since it rhymes, right? Well, indeed, everybody was expecting England to win. All right. Everybody was expecting England to win. But as a footballer myself, we all know that the Italian was much better. And when I watched the game, they were much more composed. They know what to do. They are very experienced. And to me, England got it lucky when they scored the first goal. All right. But nonetheless, it's all over, okay? It's all over. All right, so it's coming home. It's no longer valid, okay? It's not going home. It's going to Rome. And of course, all this is the expectation that turns disappointment. But if you look at the statistics, you know, I'm always a statistic guy. So you look at it, total shots on goal was 19 by the Italians. And of course, shot on target was 6, okay? So overall, the ball possession was 66%, and their accurate passes is 729, right? Look at it, the statistics. So you can actually know that between the both of them, right, how do they really fare, But the thing is, of course, we can see now, right, Bonucci is very, very happy. Okay, it's coming to Rome. Is that what he was screaming about? All right, so that is the end. It's home, but it's Rome. All right. Okay, so let's start our morning MAO once again. All right, this is the disclaimer. I need you guys to understand this. Okay, all the fun is over. Let's go back to the market. Okay, the stock market, the Hang Seng is open in probably about 5 minutes time. China has started trading. So disclaimer as usual, whatever I share is my personal opinion, and make sure that you do your own careful consideration before entering the market, okay? All right, so if you accepted the above, you identified me. Okay, let's continue. All right, so this is a very interesting cartoon that I always want to share with you guys. This is I can't see a damn thing in this stupid helmet. So obviously trying to show that this is the inflation dragon and it's above to probably going to annihilate this Federal Reserve. And Federal Reserve, right, because they purposely put on a mask so they cannot see this inflation dragon. So this is what I'm trying to say through this cartoon, okay? So obviously we all know that inflation is really right at the doorstep, but apparently they keep on reminding us it's transitory. So it is. Chong Ming, I follow your prediction. I bought England game draw and won $1,300. Oh my God. Wow. $1,300. Serious. Wow, fantastic. You bought what was it? What 1 versus 13, is it? You bet $100, you get 13 times, is it? I didn't bet. I don't bet. So, but I'm happy for you, Chong Ming. Well done. Wow, excellent. Wow, fantastic to you, guy. Okay, all right. So they can open up a football pundit, all right, channel also at the same time. All right. So why did I predict 1-1? I tell you, it's a bookie theory. As long as you understand how the bookmaker makes money, right, you will understand probably the score line for the day. But just again, I guess lucky. Okay. All right. Well, I also got it correct on the ratio. Okay lah. Okay, thank you, Chong Ming, once again. All right, want to donate to the charity organization? We are going there later at 11 a.m. Want to donate? Okay, all right. Because you can see that on Bloomberg, on CNBC, everyone is talking about the inflation. But you can also see that, right, the Federal Reserve totally tell you that there's no inflation. And because of that itself, it's pretty clear that, to all of them, they're saying that, right, this is just only a transitory thingy, a horn, and someone deliver some stuff on. Okay, you are? Cold storage. Who's the sender? Winnie. Oh, okay. Thank you so much. Okay, sorry. All right, Winnie, thank you. We received your parcel already from Cold Storage. All right, appreciate that. Thank you, Winnie. Wow, you're lovely people here. Okay, thank you, Winnie. I don't mind. Okay, contact Susan. Let her know what you want to do. Okay, all right. So this is the thing right now. Though it is there, everybody can see it, but very clear. Federal Reserve, they are saying that it's just transitory. And the best part is they are surprised. They say that they are very surprised with the higher than expected inflation. I mean, any layman could have seen it, but they are telling you that they didn't see or neither they expected it. So this is why I tell you this cartoon makes a lot of sense over here. And this is coming from straitstimes.com, all right, or Forbes.com. So it's not those grapevines or those tabloid messages, okay? So these are really from the mainstream media. Okay, let's look at the market first. Let's take a look right now. We go to the China market. Let's take a look. Now, China today, we expect to see some profit taking. All right, there's some profit taking. Not too sure what's happening, but because I thought that they did they cut their reserve ratio, right? It's supposed to be positive for the stock market, right? But it doesn't seem to be happening right now. So not too sure what's happening. But undeniable, we had to be very careful because this is this is whereby it seems to be going back below the BNB SL level, and MLP for today is somewhere around here. So it's going to test MLP pretty soon. So I'll come back to China market, but it's currently now down right now. Hong Kong is expected to be trading a bit lower if that's the case. So let's look at Hong Kong. Hong Kong today, the MLP is somewhere here about 27,327. And of course, last Friday, the Hong Kong market has already triggered the neckline level that I mentioned. Remember the neckline I mentioned, right? It had triggered and rebounded from there. That's why I told you guys to cover back your position. All right, so that was what happened. So we'll look at Hong Kong in a short moment's time. But from the chart wise, it looks like Hong Kong should be able to rebound unless, again, you know, the selling resume. All right, at the moment now, Hong Kong seems to be able to trade higher based on the chart. Okay, let's look at the indices, our own, Okay, here we go. Now, Hong Kong is going to open up in about 8 seconds time. Let's look at Hong Kong right now. You can see that once the market open, okay, you will see that all the pivot will jump. That tell you that, right? Okay, that's it. Hong Kong has just opened. Yesterday closed at, closed at 27,598. This morning, gap up to 27,612 now. This is a gap up. And of course, today, if you look carefully at the chart wise, it's very clear. Hold on, let me bring it to you. The opening price is above pivot 1. So by logic, on the 5-minute chart, if there's going to be any form of CCRY, we should see the Hang Seng trading higher. And with the KSI green, right, that is even stronger validation towards the upside. So as long as Hang Seng stays above OP and it's a CCRY, by right, it's a buy. Okay, I repeat, as long as Hang Seng stays above OP and it comes with CCRY on an M5 chart. Now, do note once again, for new student, not every chart is using M15. Some charts will use M5. Okay, all right. So if anyone kind enough, can you text for the new student here, which market do we use M5 and which market we use M15? All right, in the group chat. Okay, now Hang Seng now is coming off. It's trading below the opening right now. So probably is being disturbed by the Hong Kong, China market. Oh, China is down more than it is. China now is now down below the MLP. Now do note for China market, there's a BNB here. Can you see this? This is a BNB, right? Now this BNB, this is the range. And by right, if it start to go below the SL, it should come down the same magnitude. But because already it has came down previously, right? So the 1x1 on the BNB has been used. So theoretically, you cannot use it again. You cannot use it again. So you can only use for upside, but not for the downside. So the only thing that is usable now is the MLP. The market is trading below MLP right now. Thanks, Carl. Now, what is not that pretty is because of this guy. Now, the MA200 is here. The MA30 is here. So this is a very big, like, you know, the crocodile mouth open very big, right? This is actually very negative because we know that in traditional TA, this is actually called a death cross. Death cross. Death cross means that, right, the what do you call the larger moving average, right, is on top, and the one small time frame tallest one is at below. This is 200. This is 30 for us. So therefore, right, this is what's happening. All right. Now, just to show for new student, right, take note of that. Our MA30 is a bit different. We use linear weighted. We use close. Okay. The one in blue is 200. The one in orange is 30 linear weighted. Now, but traditionally, people use is simple moving average. I use the linear weighted. All right. There's a way, the reason for that, because I find that it's much more accurate. Okay. All right, so with the China market coming down in such a furious pace, that means that likely Hong Kong will also be going down. Quite a good chance it's happening right now. But because the KSI happened to be green in color, the downside will be limited. Okay, the downside will be limited. Okay, I'll come to this later. Okay. All right, so let's continue. Now, always every morning I will try to show you a quote of the day for being a trader or investor. So again, I brought back in Alexander Elder. You can be free. You can live and work anywhere in the world. You can be independent from routine and not answer to anybody. Now, this is the best part for traders, because why? It basically it's how liberating it is to be a trader. Because as a trader, right, you can wake up anytime you want, technically. Then after that, you can trade any market you prefer. You do your homework, and whatever you reap, right, is what you saw. And of course, most important, right, your boss will be yakety yak on you, and then you cannot need to reply. But on the flip side, if you don't work, that means there's no pay, and it's just a real world, right? If you don't work, there's no pay. All right. So if you don't put yourself in the position, then of course, by end of the month, if you have no money from your trading, then you have to really eat win. We call it in Chinese, hong. All right. So. It's good and bad on being a trader, but I'm sure many of you want to turn professional, right? And that's where we are helping you guys right now. Okay, so take note of that. So as a trader, that's always a good side of it. Okay, so what are the reasons to stay bullish in the market? So what we do in the MAO is that we talk about why should we be bullish. Then we cover into global markets news. Then we cover about all the charts. Then we talk about different markets, the technical, and the last part of it is whereby the second half of the MAO, we talk about the alternate market views, which usually means that, right, the bearish side of the market. So we cover the bullish first, then we cover the bearish. Okay, all right, this is to just remind to just gently share with all those new students who just joined us recently. All right. Okay, let me just check the. Okay. Sorry, just to. Okay. Okay, let's go. All right, now fund strat Tom Lee thinks bond yields likely bottom. Expect these hard hit stocks to rally. Now, do understand, Tom Lee spoke about this on July the 9th, all right, at 20:27 p.m. ET time, all right? And the thing is that I talked about the yield bottoming out also, but it was on Friday morning MAO. So when I saw this, right, I was like quite shocked. Wow, I mean that me and Tom Lee, we have the same train of thoughts, because everybody expect the bond yields to continue to fall, but apparently, right, he and I have the same thoughts. Okay, this is Tom Lee. So maybe we look chubby. Maybe I should put on dark glasses. I look like him already. Okay. All right. So Tom Lee has become a very closely watched strategist, because not only he has timely calls, it was quite beautiful. In fact, very perfect. He turned bullish on stock in March 2020, which was an absolute low before many others did. Then he double upgrade the group of mega cap stocks, right? Or the technology counter. And of course, he also said that, right, back then when the treasury yields was going up, right, he said that, no, the treasury is coming down. So he was always seemingly one step or two steps ahead of the boys or all the other boys. So that's why people realize, hey, Tom Lee, this guy, very accurate. Okay, he knows his stuff very well. Because at the time, right, everybody's looking at 1.7 to 2%. Even Goldman Sachs was looking at 1.9, remember? So now he's saying that, okay, you know what? He has a new outlook of the trajectory of the rates, although he still like the FANG counter, and he expects them to be very strong. So take note of that. He's expecting the FANG counter, Facebook, Amazon, Apple, Netflix, Google, okay, aka Alphabet, and also Microsoft. He feel that, right, all these counters will still be beneficial reads of the market even to the end of the year. So that's why you should take note of all these counter. Anytime this counter pull back, right, you can consider looking at that. Okay, so that is the first thing to take note of what this Tom Lee have said. He felt that, right, FANG is going to detach itself from interest rate. Meaning, right, they will be having a great second half of the year. That means that even though if the interest rate is to go up or down, it doesn't matter anymore, because he felt that this company is doing such a great job, right? There's nothing wrong about it. And if the S&P do go higher, this counter will go even higher, okay? So that is not wrong. So he felt that, right, this is going to be very explosive. And he felt that, right, the market is well positioned for any upside surprise. He felt that, right, anything from industrial to financial to material to energy, all of them are deeply corrected. So it seems that, right, later on, these companies will be still good. So overall, it seems that this Tom Lee is very positive in the next 6 months. So if you guys are also the fans of Tom Lee, you can consider to, look at potential buy as the market trades down the road. This is what you can consider. So I'm not going to say anything here. My job is to tell you that we just follow the charts. If the chart say buy, we just buy, okay? So this is what Tom Lee has to offer. Now, of course, the SPX daily change supported very well. Done yesterday, you can see that on Friday, the SPX changed very well, up by 1%. And if you look carefully over the last 20 days, the market overall is more up than down, right? Although we did saw there was some selling on Thursday, but you can see that the recovery basically dwarfed and eclipsed the entire Thursday downside. So all this because there was some program buying just before midnight. We realized that about 11 p.m. onwards, right, there's some form of program buying that you like to come in during a period of time. It's either at 11 p.m. or 3 a.m., these two timing. And of course, the interesting part is that, right, on Thursday, the yield goes down. The market says that causes stock market to fall. Then when the yields goes up, right, the market fell. They say that, hey, this one is not important. Then on Friday, the yields go higher. Then they say that, oh, because of the yield go higher now, the stock market should go higher. You see that? So basically, whatever they say, anything also correct. So you can see over here, they are telling you that no matter how, as long the yield is moving, any direction, if the stock market want to buy, there's no reason to be panicking. All right, now this is the one that we all know, right? China cuts reserve ratio. All right, you can see that it's a dovish move from Beijing. All right, it was done on Friday, and of course, it's cut by 0.5 BPS. All right, and they're injecting 1 trillion yuan into the system. So why would they be? The point is this: if they injected 1 trillion yuan into the system, right? Then why is the stock market coming down? So let's look at the stock market right now. For Hong Kong, it's now trading slightly below the opening price. And for China A50, has rebounded off from the low. You see that? So that's the reason why I'm quite surprised to see the China A50 trading down. But of course, on the flip note, there are some people saying that, okay, it's because the economy is bad. That's why they are doing this. So this is basically what people interpret from the move from China. So of course, it could be possible. It could be possible. And people may see from the other angle that, hey, if China is not doing well, right, then obviously the whole world may not be doing well. And that's what I said last week. So we will see how it goes. But these are all the news that I collected for you for today for MAO. And of course, immediately the NASDAQ Golden Dragon China Index has recovered. All right, so you can see that it gapped down first. It went down low, right? And that was where I told you guys to cover back your position. And for those who are adventurous can go long, I told you that. And apparently straight away, the market went all the way up. So I kind of believe that, right? Probably this thingy maybe have leaked out a little bit because that's how I see it. Now, of course, I did tell you, right? If you all have the extra money, you don't mind taking the risk, you can buy TD, right? So it was at $11 when I said Didi can buy. And yesterday or Friday, it closed at $12. So not bad, up by 8%. Now, would that mean that you'll go higher? I don't know. But we know that there's a very big gap here. That was how it came down. So by right, if Didi going to stay and maintain, we may see Didi going back up again, because I told you guys that this counter itself, right, is long time, for long term, it's a good buy, because Didi is very well accepted in China, and of course, they'll still utilize the app regardless for this transportation. So I still believe that Didi may see some turbulence, but I'm looking at least $14 in the coming weeks. Okay, that is my view on Didi. Okay, look at gold. Now, gold has been very interesting. Now, although the dollar has been moving, but gold also been moving, and you can see the moving is very beautiful. Why beautiful? Well, you can see the low actually got higher almost for most of them. Okay, and this is a very positive move. Hence, therefore, if gold pulls back and go up, right, I think there's a high chance that gold will be going to about probably 1820 level. Now, of course, a pullback to 1805, 06 will be a good level, because that is where you get momentum. All right, so that's what I see from gold in the next few days. All right, and last but not least, I told you about the VIX indicator, the VIX. I told you guys that if you are going to buy VIX, you buy about 16, you sell about 2021. Remember that? I told you guys that that's how you work. And after you sell 2021, if the price come back down again at about 16, you can try again. So again, today, there is a possibility for you to buy VIX at about 16 level. So that is how we trade in the market. Okay, very systematic, and we tell you, and sometimes really it seems to really happen. So guys, remember this. All right, if you remember this, good. All right, so look out for 15 to 16 for the VIX indicator, around there, 15, 16. It's a good level to watch out for. Okay, so in the second half of the MAO, we talk about the S&P pro and con chart. Okay, in terms of the chart patterns. Okay, we talk about the New York uptick and downtick chart. We talk about the real Buffett indicator reminder. And okay, so that is what we'll share later today. Okay, all right. So Susan go live. Now, every day Susan will go live from 3 p.m. to 5 p.m. Every day Susan will go live from 3 p.m. to 5 p.m. Now, where to watch this one is actually a different Facebook group. So for a new student, right, you need to find Susan, and she'll guide you in how to watch her trade live. Yeah, she's trading live from 3 p.m. to 5 p.m. Then on every Monday, Wednesday, Friday at 8 on these 3 days, 8 p.m. to 10 p.m., Susan will again go live, and she'll trade the US market. So this is something incredible, all right? This is something really incredible. No school in Singapore does that, okay? And when she trade live, right, she'll tell you what she's looking at, and then she'll really buy, sell, okay? The trades are all genuine. Of course, not every trade will win, but I think overall she's still doing okay, okay? All right. Now, of course, just to thank you guys once again, on the last Saturday, we have about 140 people attended that session. It was great. We talked a lot of stuff, and about quite a bit of people have signed up already. Now, just to let you know, on tomorrow, 13th of July, 8 to 8:30 p.m., I will conduct a short session to just gently remind and introduce people about the TWB system on its own, okay? Because 2 hours was primarily based for branding purposes and also show you market outlook. So some of people still, they want to know more about the system. So about more than 10 people have already signed up for this. So student of mine, if you think that you want to share with more friends, to ask them to come, you can actually tell them and join this short 30-minute session via Zoom, okay? That's about 8 to 8:30 p.m. All right, thank you once again. And of course, later on, we are going down to the food from the heart. All right, we're going to Joo Seng Road, okay, because we want to give some canned food. All right, apparently, because one of fellow member, Rita, saw this article, and they said that this charity organization, Food from the Heart, they need a lot of canned food. Okay, rice and bee hoon, people already contributed. They asked us for canned food, so we actually started our TWB charity food drive. And of course, very nicely, we have people from Jefferson and Richard, people like Anthony, people like Wayne, people like Gary and Eric, people like Leo, people like Sister Cynthia and Sis Mary. We have people like Carl, we have people like Nas. Okay, people who left doesn't leave their name because they are really very kind-hearted people. They think that it's okay. People like Cheng Kui, people like Philip, people like Pin, people like Bridget and family, and Chris and Mom. And of course, on last Friday, we collected a lot, but because the packaging was lost, so I couldn't really know who is who anymore. But I know the names are Eunice and Wilson, Farah, Minhui, Alex, Kevin, Elise, Catherine, my mom, my wife, Andrew, because we also put it in. So if you have contributed, but your name is not there, I'm so sorry. It's because we probably have misplaced it, or we didn't get your name when they deliver. Please let us know, okay? And of course, people like Nicholas and Allison and some of you guys who decided to stay anonymous, you have sent food stuff directly to the center. We totally appreciate that. All right, this shows that TWB not only talk about trading and market analysis, we also very, we're into helping one another, especially for this society, for the needy. All right, great job once again. Round of applause for everybody, okay? All right, so those who can do me a favor, can you give a thumbs up for all the great stuff that the people are doing? Thumbs up or love. All right, these people are really incredible. They do great stuff. Have fun. I'm playing with this right now. Great job. Thank you, Winnie, once again. Thank you. All right, Chongming, thank you so in advance. Okay. All right. So Richard Branson, let's talk about the local and global news right now. Richard Branson reaches space on Virgin Galactic flight. Okay, I missed the takeoff. But Sir Richard Branson, after 17 years of Virgin Galactic development, finally achieved his dream and reached space on Sunday. So I was wondering out front, right, if imagine that you have a dream and it takes you 17 years before it become true, will become real. Can you do that? How many of you can do that? You can actually do this for 17 years before you actually get your dream come true. So that's the reason why when I see this, right, I tell myself, okay lah, not so bad lah. I also got a dream. My dream is to really one day everybody in the National Indoor Stadium all hold a crazy app handphone and then we trade together in the National Indoor Stadium. I mean, I can't sing, okay, that's for sure. But I would love to have this happen. It means that the high moment whereby we all sit in at 8 p.m., okay, and then 8:30 p.m., something happened like non-farm payroll or something along that line, and all of us are pumping information, looking at a handphone, and then we trade together. I think that will really be crazy, all right? All right. Oh, you see, he never reached space. He go high, then landed on Earth. Okay, understand. Okay, thank you. Okay, thank you, Colin. Thank you for sharing. Okay, so I didn't really go through this article, but I just know that this is what they say on CNBC. So our Colin is better. Okay, so Sir Richard Branson is the first billionaire space company founder to write his own aircraft. All right, that is him. Sorry, the video is too long, so I didn't edit for you. But this is the thing. Space tourism is a niche. So that is quite cool, right? Imagine you run out of idea to travel anymore, right? Let's go to space one day. So maybe in another 20 years time, right? You're gonna go to moon to a staycation. It makes a lot of sense. If you want to go to Mars, maybe for a long trip also can, right? So this is what is happening right now. So human have already run out of idea. They think that maybe the moon is a better idea. All right, now Janet Yellen says that tax changes for a large firm may not be ready until 2022. So which means that the tech companies maybe will not be affected. So again, it's pretty clear that, Janet Yellen, give a very strong positive vibes to the market and the market likes it. All right, basically it's to say that you need a lot of multilateral tax agreement between one another. So all this will tell you that whole thing may push back to 2022. So it's a positive news probably to the market view. And of course, TikTok have banned influencer from promoting cryptocurrency and even financial news. Okay, just let you know, TikTok recently, right? The scrutiny is that they are going to ban because some of the very irresponsible people are misleading people to get into cryptocurrency and like telling you become a millionaire in just a month or sell online investment courses for tens of thousands of dollars. And when they do that themselves, right, they just run away with the money. So that is why you're going to see lesser of this. It's a good thing, was it not? It's flooded with all this. Okay, that's a good thing. Then, of course, most happy, yay, Singapore to allow up to 5 to dine in. Of course, we know the news, but we're just going to be like, because the variant attacking our neighboring country is still quite a bit, right? So that's why we're all waiting. But today, until now, today, 12th of July already, nothing happened, right? I see a lot of coffee shop already put table for 5. That's good. So, but now, and of course, we may see up to 8 people by end of July, if we get 50% vaccinated. All right, so guys, while we are opening up, right, but we have seen this before. Let's not repeat this. Please make sure that mask up, right, just in case, all right, never know, right? Things can really happen. So because of that, right, this is the new revised rules. So that means classes up to 50 people can resume, right? So that means that we're going to have our TWB revision again. Now, we have stopped this for a while because we want to play it very safe, even though it was allowed, but we don't want to take the risk. But since the government has allowed, then we will do that. Now, TWB revision meaning, right, students will get to meet me in person, and then we will go to the hotel, and then we will basically go through the TWB system as a form of revision. Now, of course, students who are like in the new GM 11 or 12, if you have never attended, you're able to attend it for free for the one time. For the senior students, right, if you want to revise, there's a cost to it. It's about $20 to $30 depending on the number of people. All right. So of course, it's no obligation. Those who want to attend, just attend. Okay. All right. Just let you know. Okay. All right. Now this week we're going to have big week. Okay. This week is going to be big because this week is whereby the data is going to be very important. It's called the core CPI. So Tuesday already the core CPI data. Then Wednesday the PPI data. Thursday the initial jobless claim, and Friday the core retail sales. Oh my God, this is going to be a very big week. So that's why it's quite understandable to see some of the market now technically is taking some a bit of profit because it's going to be a very big week for the market. Okay, it's going to be a big one because the market basically wants to be sure where are they heading in terms with the inflation side. If the inflation story really seems to be bad, then of course the market will want to be careful moving towards the Jackson Hole. All right. Now, yesterday we have a bit of a session. Someone did ask me, say, Cal, if everybody says that during Jackson Hole will be a tapering effect, right? What will likely be happening? Because we have seen before when everybody say this, the opposite may happen. I totally agree with this statement, and I'd like to tell you my personal thoughts on this. Now, my personal thought is that, thank you, Angeline, thank you. Thank you so much. All right, my personal thought is this. That is the same way I forecast the scoreline for England and Italy game. When everybody thinks that England will win, right? Well, to make everybody happy, they just have to do something with the scoreline in a way. So that was a perfect scoreline so that payout will be the least compared to everybody who bet either Italy or England to win. So you see, as a bookmaker, right, they just need to pay the side that basically, bet the least. Then those who bet the most, they'll take back. That means that if everybody bet Italy to win or England to win, probably 70% is betting that these two, one of them will win. Then the 30% who bet draw will likely be the winner. Can you understand my point? Can you understand this? I repeat myself. If I'm a bookmaker, right, if many people bet Italy to win by the first 90 minutes, or many people in England bet that the English will win in the first 90 minutes, then as a bookmaker, I realized that, wow, 70% of all the bets is either bet Italy or England to win, and there's 30% who bet the draw part. Then, of course, by logic, right, the final outcome will be the draw. Can you understand this? Those who can understand this, please key the word understand. Let me see whether how many will understand this. This is a very, very, very different type of way of analyzing certain things, but that's how bookmakers play this game. Those who can understand, please key the word understand. Let me see whether you can understand what I said. Right, Angeline, yeah, I hope that day will come, and I think it will come. How many years? I think 3 years, 3 years. From today, 3 years, that day should come. Yeah, I really look forward to stand in the middle of the stage, and all of you take your handphone, and then we all turn on the handphone, and then we just wave. I think that'll be very fun and cool, though. All right, so Wilson, Jerry, Gary, Eric, Jason, and Angeline all understand. Wow, you guys are very good. Okay, so what will happen? Well, I believe this will happen. If let's say this coming week, if the core CPI, PPI, all this data shows inflation numbers, so what will happen? The market will panic, and then after that, the market may basically talk about this. There will be some selling, but Jerome Powell and team will keep on pushing it up, And until probably on that day, Jackson Hole. Now in Jackson Hole, all the central bankers are there, right? So they cannot really lie about it. So they will probably maybe throw a smoke bomb and say, you know what, maybe there shouldn't need to taper. Then the market got caught by this. The market may rebound for a short moment. Then after that, they came back in and say, but of course, we may do it later. So the market like confused with it. So you are talking about now or later, and the market will go into crazy mode. So it's something like that, I believe. So it's like, making everybody to one side, then they throw out something to basically take advantage of those who went to one side. All right, so we will talk about this tomorrow. All right, but key point is this is going to be a very big week. So traders, if you are in position, you have to watch, okay? This is very big week. Well, these are all very heavyweight numbers. Now, of course, Friday, we saw the Dow Jones went all the way up. It was beautiful. It was one-sided. Nothing much to talk about. Pretty strong. So the Dow Jones jumped up 440 points to record level, rebounding from the one-day slide. So one day, it was down by 500 points before closing up down 250 points. The next day, it eclipsed the whole thing itself and then up by 440 points. So at one moment, they're telling you that they were having concern of the slowdown in global economic. Now they say it's okay, they don't need concern. So one day concern, one day no concern. A lot of BS here, but you should know how it works here. And of course, S&P now is a 6 week of gains in 7. Wow, okay? And the primary is the bank of all the banks. Okay, do note the banks will be the first sector to lead the earnings report. So tomorrow I'll cover on this. So the bank sectors is the one. So that's why you can see that Bank of America jumped. Then Royal Caribbean went up. Win Resort also went up. American Airlines and United Airlines also done well. Now, of course, the American Airlines now are all doing better because people are now traveling. Do note, right, the Americans are traveling inside their own country already. So that's why I'm quite sure the earnings will be better than the previous month, and that's for sure. But the only question is by how much and what is a projection, that is another. Okay, so of course, the big tech gains was kept because Joe Biden signed a new executive order to aim at competitive practices by the sector's giant, okay? But really, seriously, the market was kept, but doesn't mean that it went down. So it was just a little bit resistant. And of course, the 10-year yields, we saw it going down, right? So I told you again, but market don't care anymore. Even the highly infectious Delta COVID variant, also the market don't care anymore. And that's the reason why Tom Lee says there will be some initial choppiness. Then after that, right, the market will go up. And then of course, the word called risk on. What is risk on, right? Now, risk on and risk off. Okay, let me explain this to you. Investors tend to change asset class depending on the perceived risk in the markets. Okay, understand that, right? Therefore, a market where stocks are outperforming bonds is to be risk on. That means that people are taking more risk because they want to make more money from the stock market versus the bonds. But when the stocks are selling off and investors are running for the bonds or gold, it's called risk off. But the question is this: if it's risk off, but why the Tom Lee says risk on? So that is the thing here that is kind of confusing, because now with the stocks are not selling off and the bonds are going up. All right, so you have both of them going up at the same time. It's not normal. That is where the confusion is, because it's not normal. Normally you see bonds or the stock market inversely related, but this is totally different. They're going together. Hold on a minute. Someone at the door again. Hold on. Okay, sorry, Susan, you just arrived. I thought who was at the door. Okay, let's continue. All right, so stock market wise, well, on the news side, nothing much has been covered. Majority of them is expecting higher level because most of the index have closed near the high level. All right, so let's just do a short review of what happened on Friday. Okay, so let's just go through a very simple understanding. The opening price was here on Friday, right? It's between the two pivot, but the KSI was green in color. So of course, once the market stays above OP and get some trigger, it will be going up. And of course, once the market goes above the pivot one, that is very bullish. And of course, that's why the market went all the way up. All right, so you look at the intraday chart, right? You will see in a very clear picture. You will see right now in the morning, I advocate don't trade in the morning. then initially the price came down first. But because the KTR, the KSI is green, remember? The KSI is green. So the moment the market hit the KTR -1, it stopped there beautifully. That's the reason why I tell you this, guy. KSI green, look out for intraday KTR -1, -2, -3. Lovely. Usually you make money from there. And once it got itself triggered, CCRY triggered, right? Now this particular trade don't have a BNB, but still can enter, right? So you buy in, and of course, after that, gradually it went up. Now, before you look at the upside, do you see there's a BNB here? And it's a KSI jump. So KSI jump plus BNB, beautiful. But of course, this BNB it did trigger anything? It didn't, but the entry price did. The entry bar trigger. So this setup is perfect. It's called a CCRY, right? With a BNB triggering something. And the triggering something is OP, right? So this is a very good buy trading call. And of course, after that, when the price go higher, now once it's above pivot 1, okay, traditional trader will tell you to sell, but you don't do that. Any CCRY, red to yellow, you buy. Every red to yellow, you buy. Every red to yellow, you buy. You should likely see money. And that is why our system is so robust, because whatever we say before we even start trading, we already know likely where the market could be moving or how will it go throughout the whole day. Don't you find it very amazing? All right, so you find this amazing. Can you keep it amazing for me? That you just really look out for BNB, look out for KTRs, look out for KSI. You know, all this thing is something that I repeat every single day. And truth be told, right, it just keep on showing that it really worked. So if you find that this system is amazing, can keep it amazing, that'll be lovely. Well, we can see that Hong Kong is now coming down further. Hong Kong is coming down further. Yeah, indeed, Hong Kong is coming down, right, a bit more. US shares, US equity market also trading down a little bit already. Okay, thank you. Wow, thank you guys for all the amazing. Thank you, Wilson, Eunice, Lewis, Gary, Toming, Vincent, Karen. Wow, you haven't even seen yet. Okay. All right, let's jump the gun now to see the market right now once again. Okay, wow, China A50 again come back off. Earlier was recovering, right? Now it come back off again, so not a good news. Hong Kong is down further. Hong Kong is down further. Now KSI is green, but Hong Kong is coming down. Look at the 5-minute chart, we can see a better picture. You can see that Hong Kong, wow, look at it. This is amazing. Again, look at the BNB here. This is the BNB. If you draw the two lines, you can see that the market broke below the BNB and bang, it came down lower. So that is the reason why when you ever see a BNB on the chart, right, you know something big is about to happen already. And of course, the boys is selling. So that further confirms our fear. All right. Hold on a minute. Can you tell the TTT to continue trading as per normal? No briefing today. Yeah. Sorry, and let me just get myself oriented. There's some messages coming in again. Hey, hold on. Sorry, yeah. Give me a minute, guys. Sorry, yeah. Something, need to settle some stuff. Okay. Just give me one more minute. I'm almost done. So many messages. Monday, usually I have a lot of messages coming in. Yeah, because people ask questions regarding their portfolio and stuff like that. And No matter how I tell them that I'm MAO, they say that it's more important. So yeah. Okay, okay, done finally. Sorry for that. Okay, continue. Okay, let's go. Okay, so that's Hong Kong for us. Let's look at the Dow Jones. Okay, let's look at Dow Jones today. We do it very slowly. Okay, thank you for those who quoted amazing for me. Appreciate that. Okay, so Dow Jones today, we do note something very interesting. Let me do it slowly with you. Let's take a look. Now, first of all, the nearest BNB is here. Can you see that? This is the nearest BNB. So this is the BNB RL. This is the RL, which is the resistance level. And that's the top. The bottom here is the SL, right? So that is the support level. Okay, right. So what you see is very interesting. The last 2 days, which is including today, the market just cannot go past the RL level. It go through it, but basically got self-resisted. Can you see that? So there's something to take note on here. Then the support, right, is also artificially support at the bottom. Can you see that? It's artificially supported. So new zebra. Okay, I'm the zebra later. Okay. So, and some more, the MA30 is beautifully supporting the market. Look at it. Look at the way it supports the Dow Jones. Beautiful, right? Beautiful. So, which means that if you look at it, the Dow Jones is basically likely going to go into a big movement soon, because we can see that it's resisted at the RL, it's supported at the SL, and MA30 is supporting it. So overall, right, it looks like the Dow Jones is going to have big movement coming soon. Okay. So big movement, how big is big, right? That means that by right, if let's say this is the entire trading range of the Dow Jones, then we're talking about BNB, right? Then the upside could go more than one time. You can go one time of it, meaning this is like the range. So this is one, then 1 times 1 will be here. So that means that the Dow can go to 35,300 plus. But on the flip side, if the Dow Jones do break below the SL point, the Dow can come down to the same magnitude, 1 times 1, but downside, and that will come down to 33,900 area. So that's the reason why for the Dow Jones, we can see big movement in the coming week. All right, coming weeks, in fact, watch out for the Dow Jones. Now, weekly chart looks beautiful. Weekly chart looks beautiful. And let me just double check. Yeah, it's a new BNB on the weekly chart. Now, the last BNB on the weekly chart was this guy here. Can you see that? And very incredibly, it basically found the base and created the upside. So that's the reason why BNB is very good to use. So now we have the new BNB. We will change it over. This is the BNB RL. And this is the BNB SL. So now the whole BNB range got tighter and smaller. I try to make the chart a bit lower down, let you take a look. So now we are actually seeing that, right, the short-term trend is still supporting the Dow. The long-term trend has really failed, the market has failed to close above it. So there is some form of danger at the moment. And same thing, guys, if the market stays above the BNB RL, the upside is still there. But if the market do come down, right, then there'll be some selling. Now, of course, don't see this range small. It's about 800 points range, 800 points. So which means that, right, the Dow can go as high as 35,700 if it goes up. On the flip side, it may go down to 33,300 if it goes down. So just take note, the range of the Dow is between 35,700 to 33,300. Okay, that is the conventional chart, downside and upside range. Okay, so let's look at our own TWB chart. Let's take a look right now. Hong Kong is still coming down relentlessly. It's still doing a lot of selling at the moment. Okay, hold on. Okay, so let's look at the Dow Jones right now. Now, this is the Dow Jones chart. Now, Dow Jones chart, wow, that's why our Jerry say it's a zebra. Now, looking at the chart from right to left, okay, right to left. We're the only traders in the world read the chart from right to left. This is a yellow, this is a red, this is a yellow, this is a red. So which means that we have a zebra formation. Now, when there's a zebra formation, what does it mean? That means that we must take two things into consideration, which is the high. Okay, let me change the color to something that y'all can see. Okay, so this is the high and this is the low. Okay, highest point and the lowest point of the group of fours here. So that means that Dow Jones is going to have a very big range like this. So that is how many points? About 700 points, around 700 points. So which means that the Dow Jones, this is 700 points. So something similar like the weekly chart. All right, that means if the Dow Jones stays above this area, it can go up by 700 points. But on the flip side, if the market goes below, then the downside can go down by also the magnitude of 700 points. So that's the reason why if you ask me, right, in terms of risk-reward ratio, right, imagine if you short somewhere at this point here, slightly below the top of the zebra, and you short it all the way down, right? That means potentially you can make 1,400 points from this right. If let's say you do decide to short at where the market is right now. Can you see that? Okay. Oh, that is what I meant. Okay, hold on. Wow. The messages are literally flying in already. Okay, got the idea? All right, so that is from the zebra formation. But for today's, the opening price is between the two pivot, right? So two pivot is here, right? Pivot 1, pivot 2. By right, the KSI is green. So if the market stays above OP, it should be going to 35,081. But if the market stays below OP, then of course the downside could be 34,440. But do note, because KSI is green in color, so when it hit KTR -1 to KTR -3, traders take note, okay? For new student, let me show you the KTR. Once the market starts trading, right, you can see that all the technical lines are all drawn for us already. Example, KTR -1, -2, and -3 are all drawn for us. So that means that you don't need to worry to calculate on your own or know where the technical point is. By look at it itself, right, you know the technical point is either here, here, or here. Okay? So how do we interpret today's chart at the moment right now? Well, the Dow Jones is trading downwards at the moment, but there is no BNB circulate, no BNB trade, everything. So it should be sideways for a while until later on, maybe it may test the KTR -1. Only maybe lah. We will see how it goes later. Okay, so that is the Dow Jones. Let's look at NASDAQ now. The NASDAQ is also pretty confident, pretty strong upside. And of course, this is the BNB. The market did not really cross the BNB 1x1 this time round. So now it's trying to stay above the MLP of yesterday. All right, trying to stay above it. This is the MLP of yesterday. And this is the moving average of this NASDAQ at 14,470. Still pretty far away, but still looks like there should be some profit taking soon. All right, then traders just take note of that. Okay. Now look at the NASDAQ in terms of our chart. Well, the day chart shows that the yellow bar is within the two pivot 1 and pivot 2. And do note that the KSI is actually red in color, not green. Although it's green now, but we don't utilize it. We use the one before, it's red. So which means that for today, likely we could see the KTR -1 to -3 lah, for the NASDAQ. So now already you can see that it's moving away from the opening price. Most likely the counter will come down to KTR -1, which is about 14803 level. Okay, 14803 level. Okay, so that is NASDAQ. Let's look at the S&P 500. Now S&P yesterday on Friday closed all-time high level. So today also got new all-time high, and that's the reason why we are seeing this right now. Okay, now for S&P, you can see it's really very hot right now. It's above the MA30. There's a new BNB here. So even it take a while, so it means that if the market want to come down, right, it has to go down first, get itself supported before going up, if it's still going to be higher. But if the market goes below, then there'll be some trouble, okay? Because the market MLP is somewhere around here. And of course, what we are seeing that if the market fail to stay above MLP, we should see some more selling in the market. Okay, so let's look at the S&P chart also. This is S&P chart on the day chart right now. Very nice. The opening price is happened to be between the two pivot 1 and pivot 2. So if the market stays above OP, the market could be going towards pivot 1. Okay, because the KSI happened to be green in color. All right, clear? And of course, look at DAX right now. DAX has recovered strongly on Friday. So what do we do with DAX? Now let's just do it slowly. Okay, I'll take away all the lines first so that we don't be confused. Okay, here we go. Where is the nearest BNB? Let's trace together. Trace until here. Correct. Is this the nearest one? Looks like right. So this is the nearest one. If I got it wrong, please let me know, okay? This is the nearest BNB. So the RL and the SL. And you look at how powerful this BNB, this RL. Once it's being established, right, you notice that all the market just couldn't stay above the RL level. Then this is the SL level, right? The market also generally missed the SL by a couple of cents and dollar. So basically, this tells you that DAX still got a very big movement to come. DAX either going to go up by, let's say, another 300 points maybe. All right, versus if it comes down and break this technical point, we can see another 300 points, and that'll be about 15,100 plus rate. So it won't be nice. Okay. All right. So that is the view on Hang Seng on the conventional. So let's just look at the non-conventional. So S&P, sorry, the DAX, sorry. Okay, that was the DAX market. Sorry, DAX. Then what's the DAX not open now? I can show you the TWB chart here. And we can look at the Nikkei. Now the Nikkei this morning, we saw on Friday, there's a strong rebound, created a new BNB. So the new BNB, obviously we need to do some editing. So this is the RL. This is the SL, support level. And of course, the MLP is somewhere around here. So basically from the chart point that the Nikkei is still on a downtrend because it's still below the death cross. And also, even though there's a strong recovery on Friday, there's no follow through. That means that the buying was more of like, washout buying or short covering or short squeeze for the Nikkei. All right, there's no follow through at the moment right now. Okay, so you look at the Nikkei on its own. The day chart doesn't look good. The day chart, although it's red bar, right, but the KSI has still been green. So anytime it pulls back, those numbers I mentioned will be the level to take note of. Okay, so that is all the indices. Let's look at commodities right now for gold commodities. All right, so basically now they are saying that the 200-day normal moving average is being accepted. And gold is ready to regain upside momentum, all right, after staying at 1,008. Well, let's look at the market to revise first, then you answer for yourself. Now, this is gold on Friday. The KSI wasn't there. The KCX wasn't there. The KSI was there, and it was still green. So the question is this. If the market stays above OP, can we buy? Yes, if it triggers something. So once it triggers something, we can buy towards the upside. But apparently, the upside was kind of limited. So let me just share with you guys what was actually, what happened yesterday on that day. So the market was sideways for a very long time. Then after that, it went below the opening price. So we say, let's take some profit and short the market. So we shorted. But of course, there was no CCYR. It was purely discretional. It came down. But interestingly, once it hit this bottom of the chart, right, it started to basically form a base. So you remember what is the day chart KSI? The day chart KSI is happened to be green. So if the market cannot even go down to KTR -1 and then rebounded, right? That means that the market is kind of strong at the moment. And of course, the next moment, you know, there's a CCRY and the price went up already. So we waited again, another rate, price came down, but this time now we play smart. We know that there is no CCRY, we don't do. We keep on waiting and waiting until someone came in and do a CCRY, okay, on it. And of course, this is a zebra formation. Can you see that? So yellow, red, yellow, red. So this is the band that we're looking at. And of course, the market really hits the target later on. All right, you can see how beautiful it hits. And once it hit, right, it pulls back down already. So this tells you a lot on how the thing worked for gold on this Friday. It was a not an easy day, but of course, if you look carefully, gold have one BNB over here. Gold has another BNB over here. And this BNB is a CCRY that have the buying over here. Okay, so there were two good buys on Friday. Other than that itself, right, the market was choppy. Okay, Colin say China A50 recovered from the loss, but Hong Kong is weak. Is it? Okay, let's look at Hong Kong right now. Quick one. Okay, wow, China A50 has rebounded very strongly. Wow, very strongly, see? Very strongly from negative earlier, now rebounded and closed, and now trades above opening price. All right, Hong Kong is still down, but it's off the lows, so it seems to be a good sign, huh? Okay. Okay, so that is gold for us. Let's look at the charts right now for the commodities. Now for gold chart, let's take a look. Gold today is resisted. Now let me now explain to you slowly on gold. Hope you can get something out of it. Now, first of all, gold, we know that there's two moving average, right? There's two moving average, the MA200 and the MA30. Do you take note that the market touches the MA200, then it retrace, touches it again, retrace, touch again, retrace, touch again, retrace, right? For 4 incidents over the span of 5 days, the market touches the MA200 and retrace. So this 200 MA is very powerful, very, very powerful. So powerful that you must really observe this and put a line at the MA200. If there will be any day the market break above the MA200, right, and stays above it, meaning close above it, right, then very good chance the market could be going to 1834 already. And if 1834 also go through, right, the next number can go to as high as the next chocolate bar, which is about 1859 figure. Okay, so that is my view on this gold in the coming weeks. Okay, now on the other side, you also notice that gold got itself resisted, then got itself supported by the MA30, right? So now we can basically realize that there is a very strong artificial support around here between 1800 to 1806 level. So of course, we can't be buying a lot of gold, but traders do take note when you see something like this, that means something big is going to happen. So big movement happens means that, right, the equity market will also move. So that's the reason why I say the next 2-3 weeks, right, there's going to be a very volatile session, okay? Got it? All right, gold weekly chart is still okay. Overall, still not too bad. The gold MLP for the weekly chart is just about 1820. We're just marginally away, okay? Now, silver is going to engage into a death cross very soon, so I hope that it doesn't. All right, silver likely will have to go down a little bit more to see further upside, okay? All right, so this is the MLP, as you can see here, and then this is what silver is doing. Now, my personal take is silver, if you can come down to here, $25.30 will still be a great time to buy into silver. Okay, all right, so all clear on this, everybody? That is silver for us. Let's look at silver chart right now. Now, silver day chart today is quite interesting. The day chart opening price is actually between the two pivot, and the KSI is actually green, and the blue bars is retreating. So that means that it looks like for the upside, right? So if silver cross above the opening price and the pivot one, then we should see silver going higher, and the next target is about $26.89. But at the moment now, if gold price coming down, silver may come back down again. And if it come back down, it may test the pivot 2 at 25.66. Okay? All right, that's for silver, but KSI is green, so the market is still going to be more positive towards silver side. All right, last one will be crude oil prices. Let's look at crude oil. Now this is crude oil charts. Everything looks perfect, looks good. Slightly, this oil may go back up to $76 again. Okay. Yeah, something there. Okay, all settled already. Okay, so with that, I'm done all the revision of all the charts right now. We're going to enter the second half of the MAO, which is the alternate market views, which usually all the bearish news. So if you are a bullish trader, you don't be affected by me, then you can just switch away from right now. If you want to have an alternate view, just a form like a hedge knowledge, just to know what's going on or what may happen, you can actually wait on and come back. All right, I'll take a short break for 15 seconds, okay? Okay, guys, I'm back. We're going to talk about the alternate market views right now. Now, some of the information that I gather for you are not available on mainstream media because either they are paid subscription model or they are people who basically talk about this a bit too dark. So usually the mainstream media won't pick it up or talk about it. So of course, all these sources, it comes from some very reliable places. That's why I want to can share this with you. But again, like I say, for those who are new members, don't get affected by this because some of them may be, very one-sided, and this may cause you to think the market is going to crash or going to sell down. Don't think that way. Just take it as a reference point. Okay, clear? Okay, let's go. Now there's this talk about the inevitable delisting of Chinese counters from the US exchange. All right, I tell you, in my opinion, I don't think that will happen because first of all, this is like more than this is in billions of dollars business, okay? So it's really not possible to really see that happening. But this is always the grapevines and the rumors and stuff like that. So they are now saying that, right, because of the current situation between China and US, so there are some scrutiny saying that, right, Didi, the Chinese ride-hailing company, may be, going for delisting. They say that the Chinese regulator is going to do some cybersecurity review. They are saying that, right, recently the crackdown on US listed companies is not going to be good enough. And of course, they expect the American lawmaker to do something to it. So all these are what we are seeing right now in the market. And of course, all right, there's a Senate in 2020 passed a bill that they will delist foreign companies that refuse to give US regulators access to their audits after 3 years. So all these things is showing that it seems like, right, both countries are not very happy with listing on their own exchange, foreign listing, especially if you are Chinese company doing that. So there is some ongoing grapevines at the moment because right, like last time there was this Chinese-based coffee chain, the Luckin Coffee. It was supposed to be like the promising Starbucks rival. Then after that, something happened, right? The company went down. So all these things, right, tell you that Chinese company, the audit usually got problem, and this causes people get worried lah. And of course, there is also a lot of no communication between the two parties, China and US. So all these basically tell people that, right, there could be delisting possibility. But in my opinion, no. But definitely it will have a detrimental effect onto the market. Now, this is the one that everybody is bullish and bearish at the same time. Now, this is actually from Bank of America Global Research, and okay. So it's showing you that the S&P 500, and look at the chart they draw, looks very nice, right? All the triangle chart, cup and handle movement and stuff like that. Okay, so you can see it looks beautiful. So that's the reason why many of the chartists are looking at 4,400, okay, for the S&P 500. Now, the flip side of this is the SPX is likely to revisit its 200-day MA. Now, the 200-day MA is here. The 200-day MA is here. No, sorry, I bet. This is the blue one is the 50-day moving average. This is 50. The green one is 100. Now, what they're trying to say is that the red one is the moving average 200. Now, they're saying that the market must come down all the way here because it has been some time this happened. Well, the last time this happened was back in June period. All right, back in June period in this 2020. So history reveals that it's difficult for SPX to stay above its 200 MA for an entire calendar year. That means very rare do we see in one calendar year, the market stays all the way above the 200-day MA. In fact itself, right, there's a possibility that it will come back down. So Bank of America has said already, right, this has been ongoing for some time. And it basically, right, it says that, right, most likely there's of the 35 years, right, okay, 21 actually stays above the MA through June. But on average itself, right, there'll be drawdown back to the MA 200. So in short, right, it's trying to say is that the SPX 2021 near the current level, if the move below 200, it will come in. That means that they're looking at this to happen. They're looking at the 3,800 to really happen. So for now, current price of 43.50 to go down to 3,800, right? Wow, that's going to be a drastic drop lah. So they are saying that the market is kind of overbought right now. So traders need to be very careful. So the moving average, right? You want to compare, you just go to simple moving average, all right? Close for parameter, and then just key the word 200. You should get this something similar like this. So of course, on the flip side, if the market stays above it, it's very, very bullish. If the market comes towards it, then of course it'll be bearish. Okay, so this is the chart that people love and hate at the same time. Now, of course, since then, SPX has hit new all-time high 3 out of the 10 trading day, right? Because the market keep on going all-time high. But very interesting itself, right? 9 out of last 11, all right, there is a substantial decline in the week global equity. And of course, the uptick and downtick, right, shows that there are more downticks than upticks. That means that there are more decliners despite the markets at the high. So that means the divergence between the indices and the reality. So it's showing here that, right, never been seen before for some time already. So that means that there are a lot of selling internally while they're pushing up this tech shares. I mean, of course, the big cap shares, that's what's happening right now. And the last one is the Warren Buffett indicator, right? Now, Warren Buffett indicator, this is the one, the orange. Now, this was done sharing during the preview yesterday on Saturday. Now, basically, the Warren Buffett indicator usually will have a bottom as a technical point about 1.35. And then after that, the stock market will fall. As you can see, every time it go past, the market will fall, right? But this time round, right, the indicator is 2.36 and still climbing versus the average 1.35. So it's like 1 full point above the norm. So it's like basically, right, you're basically buying something for almost $3, but the cost itself is $1. So this is what's happening now in America. And you can see that the stock market keep on going high while the real Buffett indicator is also moving up at the same time. Okay, so even during the Wall Street crash in 1987, can you see this? Wow, look at the magnitude of the selling versus the market movement, right? It's really different. Because 500 points back then is a lot. 500 points today is almost nothing. So, but of course, they had to show it to you not in percentage form, but numbers form. So you can see very clearly that the market at the moment now is clearly in the bubble stage at this moment right now in terms of valuation price. So everybody, you cut yourself very clear. That is whereby we need you to be very careful for this coming week, because there's so many big data coming out, and as long as the inflation data are stronger than expected, then of course the word tapering will be definitely on everybody's lips until we come to the point whereby Jackson Hole comes in on the 26th to 28th of August.